talk about another very good set of numbers that came in. Bajaj Auto, the stock is actually in the green despite the huge run it has seen up until now. Rajiv Bajaj, the managing director of Bajaj Auto, joins us on the phone line to talk about that. Rajiv, hi, good morning, and congratulations on a good set of numbers that you've reported this time. It's come courtesy the rupee depreciation. So now that the rupee has, attained that appreciation path yet again, do you think these 23% margins may not be sustainable in the quarters to come?
Well, I think the short answer clearly is that 23% may well be a peak, because it is unusually high, even by our standards, if I may say so. And definitely, in the second quarter, we have realized about 60 rupees to the dollar, and there's no reason to believe that that's going to get any better. So yes, in that sense, I would say you're right that this pretty much should represent the peak.
Okay. Hi Rajiv, good morning. Thanks for joining us this early. You have been selling what, 145,000 units in the last 2 months in the export markets. Should we expect that to be the run rate?
Okay. The total export for the second quarter is 400,000, so that is closer to about 135. But yes, in the last couple of months it has been higher. We would certainly like to think that that can be maintained or perhaps even improved. Hopefully, October should be a little better. And I think what's going to help us both in the domestic and export markets is all the new products that we have launched in the second quarter. So while the Q2 was held up more than anything by the exchange rate, but and that has helped us to weather many of the adversities. But we have the new Discovers in now. We have a whole new range of three-wheelers in place in the marketplace. So we are hopeful that this will give us additional momentum in exports as well.
Okay. Well, Rajiv, the other positive of this quarter is the improved share of the premium segment. Premium segment bikes have gone up from 26% in the first quarter to 39% in the quarter under review, we understand. You will be able to maintain that because that gives you a decent uptick in margins.
Actually, I would say I hope we do not maintain that. What I mean is that the segment itself for the sports bikes has shrunk somewhat over the last 2 years, and we've been fortunate to maintain market share, or actually to increase a little bit in terms of market share. However, in the second quarter, as is usually the case, the rural demand was weaker, and while therefore the Pulsar held up in the urban markets, the Discover was especially slow. Also because, as I've said, through the quarter, we were cutting back on dealer stock to make way for the new Discovers to come in. And that is why the ratio shifted in favor of exports, in favor of three-wheelers, and in favor of the Pulsar. But I do hope that the new Discover will do very well. And if it does do as well as we think or we hope it will, then of course the ratio will change. The mix will change a little more in favor of the Discover. But that's all right. That's a very profitable brand for us as well.
Okay. Since you have spoken about market share, what is the domestic two-wheeler market share that you think Bajaj Auto will stabilize at? Because that's been a bit of a concern for the market. You've been losing a bit of the market share in the executive bike segment in the domestic space. On an average, what do you think a sustainable rate could be?
I think that concern is very valid, and approximately we have lost 2% domestic market share, of which again approximately 1% is a weighted average effect because of the shrinkage of the Pulsar segment. So although our market share within the segment is intact, but due to the weighted average effect, there is a loss of overall market share there, and about a percentage point or a little more on the Discover segment, which has brought domestic market share to about 22%. Certainly, I have no reason to believe it will erode further. On the other hand, of course, we are very hopeful that with the launch of the new Discover 100, we should gain some share. Just to put that into perspective, the last time we launched a new 100cc Discover was in July 2009. At that time, our domestic market share was about 15.5%, and it moved up to about 24% in the next few months after that, which is where it has remained more or less over the last 4 years. So that's the kind of jump, about 8 or 9 percentage points in terms of market share in 2009. And I'm not sure that we will necessarily make the same impact, but surely I think we should gain a few percentage points on share.
Okay. Just coming back to that point about the rupee, Rajiv, in the Q1 call, you had guided to a Q3 realization of 59 to the dollar if the rupee remained at around 59. Given that now we've seen it move beyond the 60 level, would you want to sort of revise your guidance upwards?
Very marginally, if at all, because in the second quarter, as I said, we've realized approximately 60 rupees to a dollar, despite the fact that there were days when the rupee was well above 60. And that is simply because of the way we have hedged a large part of our exports. So really beyond 61 or 62 rupees, we really don't participate in those gains. And therefore, the Q2 result in that sense, is to be viewed in the context of 60 rupees to a dollar and not 63 or 64. And I feel that 60 rupees to dollar is realizable, appears to be realizable in Q3. I don't think it's going to be much better, and I hope it's not going to strengthen from there.
Yes, point taken. Rajiv, you said that per quarter you are doing 400,000 vehicles in exports. Would you want to cut prices and stimulate that further?
I guess in the end, price cut, Lata, must depend on what the competitive situation in the market is. And we have always found ourselves to be in one of two situations in all our export markets. Markets which are dominated more by the Chinese, primarily those of Africa, we have found that we are typically 30 to 50% more expensive than the Chinese makers, and still we have done reasonably well. Now, if we were to cut prices by 5 or 10% and still be 20 to 40% higher, it would not make any difference to the consumer. So we would gain nothing by passing on. We would not gain in terms of sales by passing on any of the forex gains. So we've kept it with ourselves. In the markets of ASEAN and LATAM, which are dominated largely by the Japanese players, we are pretty much priced on par with them. And since there is no move on their part, on the part of a Honda or a Yamaha, to reduce prices, it would be silly for us to do it and get the industry into some kind of a price war situation. So there's really not been much pressure to pass on the gains. What we have done, though, is when we've launched some of the new products, notably the three-wheelers, and I can say this to you because it applies both to the domestic and export markets, where the material cost, due to the better features that we provided in the product, has gone up by close to 3,000 to 4,000 rupees per vehicle. We have not passed that on, especially in the export market. In the domestic markets, we've partly passed it on. In the domestic markets, we've absorbed that. So I think this is the right strategy to offer more value to the customer rather than to just pass on something as a discount.
Fair point. Okay.